Good morning. Thanks very much for joining us for this European Outlook focused on France. My name is Richard Betts. I'm the group publisher at Real Asset Media. For those of you who don't know us, we run a series of events like these, around 50 or 60 a year, newsletters called the Real Asset Day, magazines, TV, and also the Senior Housing and Healthcare Association we're a founding partner of. Just to pick up a little bit in terms of what we've been doing during the current health crisis. You can obviously read the magazines, but we've also been doing new initiatives like special reports and in-depth analysis. You can download that free from our website. Realcast, which is a weekly analysis of the markets and the news and the headlines, as well as moving all of these events online, so that it means that speakers and attendees can join from wherever they are. We're also going to be introducing a new expo and conference called RealX in September, on September the 17th and 18th. So more news coming about that shortly. But again, the aim is to connect people globally and really share insight, strategy and research, which is really what we're aiming to do here in the session this morning. We've got a super panel here, and the panelists can now all put on your cameras for us. But we have Nicola Ciavarella from Savills, Alfred Fink from TaylorWessing, Tania Concejo-Bontemps from Union Investment Real Estate, Benjamin Cartier-Bresson from Berlin Hip, and Guillaume Turcas from Faro Capital. Let's start. And we'll also, of course, have a presentation coming up from Cyril Robert, also from Savills shortly. But let's just start, I guess, with introductions. Let's start with you, Benjamin. Just a quick introduction of yourself and also the company, just so that then everybody knows exactly who you are.
I'm in charge of the Berlin Hub Paris office, which opened 10 years ago. Berlin Hub is a mortgage lender based in Berlin, Germany, and present in 4 countries: Germany, of course, France, Netherlands, and also Poland. We are a senior lender. We provide mid to long-term facilities to investors against commercial properties, including office, retail, and also logistics. And very important, not to forget, we are part of the association of the German savings banks, who are our shareholders, and we interact very closely with these savings banks all over the German country.
Great, that's super. Guillaume.
Hi everyone, my name is Guillaume. So I founded and I'm the managing partner of Faro Capital Partners, which is a boutique real estate, mainly active in core plus and value-add real estate over France and Germany mostly.
I'm Tania Bontemps, head of Union Investment in France. And as you know, Union Investment is a German investment manager and asset manager, and we are acting over 23 markets and countries, and managing over 40 billion of assets, real estate assets. And in France, we are present now for over 20 years with a prime portfolio of, I would say, mainly offices, and also some logistic, residential, hotel, and retail.
That's super, great. Cyril, let's just try yours again.
I'm in charge of the research department for Savills France, so in Paris. We are here in order to give the best analysis of our real estate markets, mostly investment and letting markets. But we are now developing logistic departments, so we have to follow this market. And in the next few months, I think we will be more and more involved also on the residential market, as we are developing the residential capital market department. So
super. That's great. Thanks very much. And we'll come back to you in a second. Alfred.
Yeah, my name is Alfred Fink. I'm a partner in TaylorWessing law firm here in Paris. TaylorWessing is an international law firm present mainly in Europe, UK, Germany, France, Netherlands, Poland, Vienna, Czech Republic, and Hungary. And a little bit also we stretched out into Asia so that we have a kind of a global reach, with the exception of the US, where we are only present with branch offices in New York and in San Francisco. My practice is mainly real estate, corporate real estate. So it's really buying and selling, investment side and asset management side. And we are very often acting also as advisor to the borrower in investment financing.
Great, thanks very much. Nicola.
Even if I know you are mostly focused on the investment market, I will do a very short presentation on the rental market, as it is an essential driver of the investments. Where is the letting market in France? Mostly in the Paris region, as Paris region is a kind of barometer for the French market. Where is this market at mid 2020? The first and the most important information for this market is the decline in take-up. This decline had started before the crisis for 18 months now. For instance, last year ended with a result close to the 10-year average. So unlike the investment market, the rental market has therefore approached the COVID crisis in a more or less fragile situation. The decline has been amplified since the spring with lockdown. For instance, during the second quarter of the current year, less than 2,000 square meters were rented. It's the worst quarterly results in more than 10 years. In total, since the beginning of the current year, take-up has been limited to 670,000 square meters, down 40% in comparison or compared to last year. And we very clearly fell below the 10-year average, which is over 1 million square meters. I also have to add that these results could have been worse without taking into account the rental of the Link by Total. The Link is a twin tower project in La Défense, developing 130,000 square meters, and which will be completed within the next 5 years. So this transaction alone represents almost 20% of the total take-up observed in the first half of the current year. So I think that's the most impressive illustration of the impact of the COVID crisis. Concerning the vacancy, as a result of a drop in transactional activity, the vacancy has risen slightly since the end of last year. However, it remains at low levels since the vacancy rate is only at 5.5% at the end of June. So that's there's no problem of oversupply globally in Paris region. The increase should continue in the next few months. For instance, if you have a view on future completions, 340,000 square meters of new or refurbished areas are expected to be delivered in the second half of the year. And for next year, for instance, it's more than 780,000 square meters, available square meters, which will be completed. So we probably have an increase of the supply during the next quarters. The situation within the Paris region is not the same everywhere, and there's some very varied profile between the different submarkets. For instance, in inner Paris, there's clearly, even with the slight increase we saw during the last months, in a situation of undersupply with a vacancy rate of less than 2%, for instance, in the CBD, while in the same time in the Western Crescent, for instance, we often have vacancy rates close to or above 10%. So there's some very different situation. The other point, important point concerning the vacancy or the available supply is to keep in mind that the supply is marked by the obsolescence, since only 21% of available supply have been delivered for less than 5 years. I also have to add that in the future months, with the increase of available completion, this problem of obsolescence will be less important. And last point concerning the letting market, an important market for landlords, I think, that's the rents with on one side the prime rents. So I just have to explain you the figure you are seeing on your screen concerning prime rents. It's an average between the 5 most expensive rentals sold during in a rolling year. For instance, you have a very big increase during the last quarter, and that's clearly an impact of the letting of the 96 Sienna by Goldman Sachs at more than 960 euros per square meter. So concerning the rents, especially in CBD, they have increased significantly over the past year. The prime rent is now at more than 930 euros in the second quarter of the current year, up 10% over 1 year. So that's the point on the letting market. Concerning the investment market, the situation is a bit different. As unlike the rental market, investment has approached the crisis in a good shape. A very large investment volume was recorded in the first quarter with more than 7 billion euros for France, which made it the best start ever observed. Clearly, the activity slowed in the second quarter, falling to 4.4 billion euros. In total, since the start of the year, we have quite 12 billion euros, which have been invested in France. This is less important than the volume of last year at the same period, with a decrease of 17%. That's clearly different with the letting market. We are still clearly over the 10-year average, which is at 10 billion euros. The fact is, we have to underline that the transactions recorded during the last months had started before the crisis. It's important to know that they are coming to an end and they have not been cancelled, but the question is now the ability of the market to generate some new sales. So it's therefore possible that the slowdown on the investment market, the slowdown linked to the COVID crisis, may continue in the third quarter. Just a quick analysis of the investment volume during the first half of the year. So just want to say again, that's provisional results, but there's three main trends. That's the success of industrial assets, with a share growing from 10% last year to 17% of total investment volume, and also an increase, and that can be a bit surprising, of the share of retail assets, but quite simple explanation for this increase of retail share. That's the very big sale by Unibail-Rodamco for more than 1 billion euro of a portfolio of shopping center. The second important trend, and it's not a surprise because it's always the same thing during crisis, is that the market is clearly more focused on domestic investors, with a share of quite 2/3 of the investment volume generated by domestic investors. The other point, and that's due to the success of national portfolio. For instance, when I was saying that there's a big increase of the share of industrial assets, that's mostly through the sale of a big national portfolio. So the share of the Paris region in the total investment volume in France is decreasing during this period. And last point, but important one, with quite few things to say by now, it's concerning the yields. The fact is, if you, with the exception of shopping center, where we saw a slight increase of the yield, of the prime yield, during the last quarter, the prime yields are quite stable, with less than 3% for office prime assets and a bit more than 4% for industrial. The fact is, there's no clear impact on prime yields, impact of the crisis on prime yields. The impact of the crisis is more on the secondary yields. And the fact is, if we can guess that the prime yields will remain quite stable even in the next few months, the gap between prime yields and secondary yields will increase with a wider scale in terms of yields.
Maybe just start with you, Alfred, if we can. Just in terms of the sort of post-crisis period, I mean, it's very good for me, certainly sitting in London, to be able to see a number of people back in their offices in Paris and to see things beginning to come back to some form of normality. What's your sense of I suppose, some of the shorter term and longer term influences, either in what you're seeing in the market, or I guess also what you as TaylorWessing have had to do potentially to adjust some of your strategies?
I think we are really the lucky ones that we have been released from lockdown for the last 2 weeks, and you will laugh, we will have already once again people sitting outside on a terrace having lunch, dinner, and taking a glass of wine in the evening. So it has been a little bit relaxed, and we are trying to get to something which is called, in France at least, new normal. So we are wearing our masks, we are taking seriously into consideration the social distancing. And so far, I think that is something which is good. But we have also seen that there is a lot of hesitance. At least we can take the example of our office, to get people back into the office. It's a kind of a psychological thing that a lot of people have become used to working remotely. And nowadays, saying getting back into the office is not as easy as somebody could imagine. So the lockdown, doing that from one day to the other, is an easy thing to do. But after 2 months of lockdown, it's difficult to get people back into the office. And that may have also an impact on office and office use, some strategic thoughts about, do we need the same space in the office as before? And I think there are already a number of questions, discussions, and first comments coming in from at least AXA, who was saying that they will reduce the office space by 30%. Allianz is doing that the same way in Germany, to what I learned from the newspapers. So I think there is something which is important. And I think the first reflex will be, at least also from my perspective as partner in our firm, we will certainly get more flexibility into the way people work with each other. So even if you don't say we will have a complete remote office somewhere, but we will certainly be more relaxed, having people working from home in the morning, the afternoon, and the evening, and then have some key time in the office which has to be shared to keep everybody abreast about what is going on in the firm, that we keep the same culture, training, and so forth. So I think that's a shortcut, at least from the general perspective. I think looking at my desk, what has changed is that there were a number of big transactions before the lockdown, which has been on hold, and to a certain extent, they have or were simply aborted. That was mainly the value-add transactions, where people were going to buy, for example, the 3 or 4-star hotel with the idea to put it into a 5-star hotel and put it in the market again into 3 years' time. So this kind of value-add transactions with a very short investment cycle is something, at least looking at my desk, a little bit on hold, or people are discussing postponing the closing into next year, signing today, but doing something next year. So that is something which was new for us. On the other side, we have also people coming in, trying to, at least in the hospitality sector, saying we have a lot of equity. We would like to get exposure to luxury. So there's a lot of things going on. We have effectively 2 transactions on, where we are buying, one selling a hotel for clients, and the prices are the same prices than before the lockdown. So there's nothing changed, because there are strategic investors doing that not only on their own, they do it for one of the big hotel operators. And that is a strategic decision. And so far, we are in Paris. So I think also, and I think perhaps our colleagues from Savills will comment on that, at least in Paris, I have the impression there's no price compression due to the COVID. It's simply, if you get outside the périphérique, as we say, the city highway, then we have price compressions, but not in the inner city. That's something which is, in a nutshell, something which was new to us. We have a quite high request for data centers nowadays. I think people look through what has happened in the lockdown, and the necessity to be really connected, having sufficient space, the cloud and what everything is around that, has shown that people have switched very quickly. And I think there are people getting really in new strategies on that. What's also interesting is that we have already been involved in a number of insolvency proceedings where big retailers have been put into insolvency, and all of a sudden there are 100 or 200 shops or restaurants which are now for sale. And astonishingly, a lot of interest is out there, and the offers for taking over this kind of big portfolios of shops or restaurants has been quite interestingly very high. So I think there's also kind of a reason of I think caused by the lockdown, that retailers, high street, restaurants, chains of hotels, smaller chains, are in a very difficult situation, and therefore we find ourselves as advisors in insolvency proceedings where we bind now insolvent quote-unquote companies. Last but not least, we get a lot of requests nowadays in Paris for ground leases, which is not an issue or not a subject which was so much looked after in the last 5-6 years. We have only worked with one big American investor on that. And now I see there's a lot of more interest in ground leases, which is more concept in London and the US than in Paris. But we are more tied to that. So I think in a nutshell, that is what I can say. And I get the impression that people who have a lot of money, institutional investors, are telling us that they are looking only into core plus assets and nothing else. So there's also a kind of move from institutional investors into core assets. And so far, I think that is something which is particularly in France the case. So I think we get back to fundamentals in real estate that also people are talking about very much creating more value in real estate, and not only trying to get a very cheap financing and flip the asset as soon as the market price of the asset has increased. So I think that's a little bit back to basics is the one message, I think. And what was core is perhaps less core today. And in so far, I think that's what I can say.
Okay, good. I'm going to pick up some of the questions coming in the chat in a second. I just wanted to pick up with you, Benjamin. In terms of this obviously is not a financial crisis like the previous crisis, but is it having an impact or an influence on the availability of finance? What's happening in terms of the financing markets that you're seeing, and indeed, are you seeing the same things as Alfred in terms of investors still active and looking at deals?
In terms of capacity to continue and provide loans to investors, we are in a position which is good in the sense that we continue providing offers to our clients. We continue to disperse loans. The capital markets have reacted when the crisis was starting and was at its peak, which means that the funding rates have increased slightly. Nevertheless, the situation has come back to, say, almost normal since then, with the volatility which is now, say, under control. It means that if we are in a position to make loans, what do we decide in current times? And as you can imagine, what we are missing right now is visibility. When providing a loan, we need to ensure that there will be sufficient cash flow to pay the debt service. And we are facing a situation where, say, for the short term, it's not easy to see how some assets will react. I'd like to remind that today in France, the situation is quite good in the sense that people continue to live normally or lead normal lives again, but it mustn't hide the fact that we have ahead of us an economic crisis which should be major, we talk about a GDP decrease of 10%. We talk about an unemployment rate that could increase over 11%, which is unseen before. And as a result, we should not think that we have reached the new normal yet. This will be done over time. And it's only after a couple of months or quarters that then we will know exactly what the new fundamentals are. As a result, I would say, well, at first we see much less large investment transaction right now. That's been said in the presentation. I think that after maybe a couple of quarters or maybe years, when the situation has stabilized, then the French market will benefit from its extremely strong fundamentals again, i.e. a very deep market with the capacity for investors to invest into large assets and with lots of transparency and also the capacity to underwrite easily assets. And that should lead to a very favorable situation for France on the investment market compared to other countries. But that's only after the new normal has arisen. And until then, I would say that flight to quality is the motto, in the sense that with limited visibility, we look to finance properties which offer the best guarantees in terms of cash flow, i.e. typically properties which are let to good or very good covenants for a lease term which is as long as possible.
Okay, good. And Tania, maybe coming to you, just in terms of the investment side. I mean, we heard there from Alfred the sort of expectation of maybe prime, particularly being less impacted in a way. Well, what's your sense as an international investor in the French market? You know, union investing not just in Europe, but of course around the world. But what's your sense of the French market at the moment? Do you see prime holding up? What's your view on it?
Yes, totally. I can really totally agree with what I heard from Savills today, and I also see that from an investor perspective here in our portfolio, that we have mostly premium and core assets in our portfolio here in France, and they are quite resilient, I would say, to the actual situation and to the crisis. And in terms of valuation, also we received the first valuations now on the 13th of June, and we also can confirm that there's not much impact on the value of the building. So this is something that is always a safe haven, I would say. It's always a flight to quality, as we already said, but we also have some buildings in the suburbs, and there, of course, values are a little bit more volatile, rents also, and depending also if we have some retail or some other type of asset class, there can be a lot of differentiation in terms of adjustment of values, adjustment of rents. So this is something that we see. There's like a real polarization of the market in terms of course, asset classes, but also in terms of location. I mean, I have no issue with my buildings in the CBD. And even if I have some vacancy in the future, I know that I will rent them, and maybe I will need to give some more incentives. But the thing is quite, I would say, the business model is quite stable. But of course, if I'm in La Défense or in some peripheric market, I will have a hard time, I would say, in the next couple of months to find some tenants, because of course the tenants also have stopped mostly their projects. Everybody is thinking about making some savings, rethinking the strategy also. What is the trend now with working from home? It already existed before, but now, I mean, many companies, I think, have tested the concept, and they have seen that it's working also for some kind of their employees. So I think that home office will be maybe 30 or 40% in the future. So that's something that we need to include in our business plans. We need to adjust. We need to compensate this, providing more service and providing more shared spaces, and also more give some value add to the building, not just putting in place some empty surfaces where there's nothing. So there's a real high expectation from the occupier side. And maybe one more thing is, of course, that the covenant, as we said before, is going to be really important. Of course, the solvency rate of the tenants and the activity they are belonging to will have a big impact also in the future. I think also in terms of valuation. That it's not the same if you have a tenant who is in the aeronautic or automobile industry right now, or another tenant who is in pharma or high tech. So I think there will be also, as I said, a gap between core buildings, no core buildings, and also tenants in certain sectors and who are doing well, and the tenants in other sectors who are quite suffering from the crisis. So these are things that existed before, but the crisis is just accelerating and pointing out this polarization of the market.
I'm just going to launch a quick poll. Just so this one is when do you expect investment volumes to return to pre-crisis levels? December 2020 or earlier, June 2021, or December 2021 or later? So it'll be interesting just to get your sense of where we are in the market. Just in terms of the investment that you've been seeing from the kind of clients that you're working with, how much of that is how much of there is a pause, do you think, from international capital? I suppose a pause in general, but especially a pause from international capital versus domestic capital.
Well, the thing is, even if the border are closed, outside the Schengen zone, there's still a lot of people that can help you dig into local or national real estate. So I would say that everyone is connected and everyone is linked. So I would say the capacity of international money, could it be institutional or more, I would say, private equity money, is still, I would say, available on the market. But I would say the main thing that I kind of get back from what happened in the last months is now you have a real, I would say, risk reward that is coming back. So if you would remember, end of 2019, early 2020, basically, there was like, the reward was kind of the same for any, I'm being maybe a little bit pushy here, but I would say the reward you could get on a real estate strategy was kind of the same, whatever kind of strategy you were doing. As there were such money available, financing was, I would say, easy to get. The margins were really low, and I would say the virus has, the only good impact so far is that now the risk reward kind of, ladder has been put back in place. So when you're looking for a lot of risk, obviously there's less people on the waiting list. When you look at the large value add deals that have been done, end of last year. Yeah, I mean, the top bidders were, I would say, long-term institutional, and this is typically not the kind of people you would have in a, I would say, a more standard market. So I would say risk-reward balance is back. So I would say that is a positive thing. But getting back to what Tania and Alfred was also mentioning is, well, there's been also in the last weeks, last months, a lot of rent collection issues. So basically, now you have to be very careful to, whatever asset you have, to be very careful to what I would say tenants you are facing. We've seen in the retail space and the hotel space too that the last quarter was really hard to, I would say, to deal with. And I would even suspect that the next months are going to be even more painful, as as many countries in Europe, especially France, has been helped, supported massively from the state, from the bank. So I would say so far, it's just the tip of the iceberg. So obviously, I would expect that the retail hotel situation to worsen, especially with the summer we're gonna endure, and then all these kind of impacts are gonna, I would say, slowly go to the office market, obviously, because a lot of companies have been hit pretty hard, even if you look at stock markets that have been back artificially to the level they were, I would say, pre-virus. Well, we all know it's artificial, but behind that, there's, I would say, a lot of strategy, a lot of enhancement of companies that are not, being done or being postponed. When you look also, it's interesting at the leasing situation is, we're working on an asset with partner in the CBD of Paris. So obviously the situation is, is pretty good versus obviously the suburbs. But, pre-virus, we were talking to, potential like 10 tenants. And, as of today, we have, I would say, obviously, maybe one or two people we're talking to. So, and in addition to this, there's also a lot of, large corporate that are looking to sublease their space. So I would assume that, so far we obviously have benefit from the support and the kindness from the financial partners so far. But, at the end of the day, the interest have to be paid, the loan has to be reimbursed. And, at the end of the day, well, when you can face the debt service, well, you have to put the asset on the market. So I would expect within the retail space, auto space, and then also for some, I would say, owners that have been, pushing too hard on the debt, and the rents are not covering, I would say, what they need to pay. It's, I mean, a lot of situations are going to rise. So I'm a little bit more skeptical about the future. Obviously, CBD, I would say, is to be preserved. But the good thing I would say is risk reward is going to come back. And I mean, from every situation, I would say it's going to take time to come back to a certain normal. I was discussing with someone a couple days ago, and he was mentioning, he was working in New York, and just after 9/11, for like 6 to 9 months, no one was willing to rent any area within high skyscrapers, and just 1 year after that, everybody forgot after that. So I would imagine the virus is here to stay, maybe a little bit, and then we'll adapt to that. Hopefully we'll find a cure, and it take time to go back to normal.
Okay, good. Yeah, it's very interesting. I mean, I remember that as well, that after 9/11, there was then going to be suddenly there was going to be no high-rise buildings for residential or office any longer. And the human capacity to be able to forget things is extraordinary, I think, as well. Nicola, do you want to pick that up? And also, I want to pick up some of the things in the Q&A as well, which are there's a lot of discussion here around logistics, especially. Thank you for that, everybody. So there's a run on logistics assets throughout Europe. Where do you see yields for that asset class currently in Paris and France? But there's also questions here coming in which are around also hospitality and leisure, and especially, which I want to pick up with everybody, that sense of if there's a economic downturn from this and there's likely to be significant unemployment from it, what does that also mean for things like office take-up and requirement? But maybe Nicola, it might be just useful from a Savills point of view just to run through where you see the key sectors going forward.
Yeah, I mean, the key point is that we are living in a world of uncertainty, and uncertainty is driving investors to the safest asset class. Safe asset class today, to me, and you can see the reaction we're seeing from the very first week of the lockdown, is in terms of office space, will be what is all the core spectrum, like we said it already, fantastic covenant, long income stream, good location, no capital expenditure to be injected in the short term. So everything which is a core prime office space is still, to me, the king of the asset class. It was still attracting a lot of capital inflows, both from domestic buyers and international buyers. But then, if we need to discuss about alternative asset class, of course, logistics is, because of the COVID and what we have seen over the last months, ranking up all the investor investment criteria. Multifamily is becoming all the more important. We have drivers that are more linked to the social phenomenon, like a growth population. But we see, we have on a regular basis demand from very forward-looking buyers that are seeing, what's next? What's the next asset class? So office, yes. Retail and hospitality, they're not doing very well. I was looking at the graph from the IEIF showing how listed companies operating in different sectors have performed since the beginning of the lockdown. And you can really see when the lockdown started, everything went down, but then residential went up and recovered basically the pre-COVID values. Hospitality, and retail very badly performing, and office was more or less in the middle of the pattern. So yeah, this is basically the fundamental points. And then if I need to go back to the office, depends on where you are in the risk-reward curve. We said it already. Core investments have been very active since the very beginning. I mean, in the first week of the lockdown, I like to mention that, because in the first week of the lockdown, we received the second round of bid for an office building we are selling. And we received offers at an even higher level of price of the one that we received for the first round before the lockdown. And that was, to me, a clear sign that the crisis we're facing is completely different from the GFC. And because it's a different environment, lots of capital commitment, more transparency, bond rates to zero, technology that is allowing us to do some virtual tours. So there was a lot of excitement about it, doing things, moving forward. And so, and that was a clear sign to me that we have, and we still have today, office and type of asset that are still very liquid, where a lot of capital is available and will be deployed. And so that gives some positive signs, and it's not just a gloomy crisis that we have seen during the global financial crisis in 2009.
I'll just share the results of this one. When do you expect investment volumes to return to pre-crisis levels? It was 13% for December 2020 or earlier. June 2021, 28%, and December 2021 or later was 59%. So that's interesting, just in terms of the sense of where people see the market. I also did just a quick one here, which is on locations of office. Will we see a rise in secondary or suburban offices post-COVID? Partly because there's been a lot of focus in the States on that idea that secondary office actually will come back again and will be a popular asset class because of the work from home side. Interestingly, that split there, 46% for yes, there will be a rise in secondary or suburban offices, and no, it'll stay the same, is out in front at 54%. Just in terms of, I suppose, some of the sectors, Benjamin, what are you seeing? Obviously, from a bank perspective, you've got to work out where you can loan. Does that mean you're looking more at some of these alternative sectors? Does that mean you're picking up on trends like ESG, green lending, those kinds of things that seem to have been accelerated by the crisis?
Yeah, Richard, indeed, we've always been very selective on the assets we finance, but this will be even more so in the future. and the green building elements is just increasing in terms of how important it is. It's not something new, really, but it's something which is accelerating. We've been, we've innovated in the sense that we've been the first lender to issue green Pfandbriefs, i.e. backed by a portfolio of mortgage loans against green buildings. And this is clearly part of our major goals to increase this in the future. Generally speaking, the properties which will resist the crisis the best will be those which meet the best the requirements of the tenants. And the tenants are more and more sensitive to the fact that they are responsible in terms of environmental issues. That means these assets have a bright future, and those who are not performing from an environmental standpoint will suffer. In terms of the different sectors that we are, different kind of assets that we are lending against, well, office will be impacted by the increase of home office, certainly. But we hear also that home office is not a solution per se, i.e. workers are much better performing, rendering a much better service when interacting with each other on a physical basis, which means that there will still be need for desks in large office buildings. So it's difficult to say whether companies will sharply reduce their needs for office spaces. There are elements playing in favor of that, like home office, but also there is more space needed now for people working in office spaces because they need to respect the distanciation. So it's difficult to predict. What is certain is that the cost of renting offices for corporates is major. It's the second element of cost after the wages, and companies which need to ensure their profitability will be looking for properties which are as efficient as possible, i.e. with possibly low rents or offices which offer super accommodation so that the performance can be at its peak. So just to summarize, we look at properties which are of very good quality, possibly green buildings, which meet the requirements of the tenants. And we are careful at those industries which are clearly impacted, like aeronautics, of course, but also other ones which will suffer in a couple of quarters.
Great. Okay. And just in terms of maybe picking up with you, Tania, if I can, there's a question here around construction pipeline, particularly for office. What's your sense of, I suppose, what's your sense of the construction side and the pipeline and how that might be influencing some of the sectors, particularly office?
Well, I think it's the same thing. It's either we are in Paris, and I mean the construction pipeline is quite restricted, I would say, because of the lockdown. Of course, we will have some of the deliveries reported, but I mean at the end of the day, there's not much qualitative, I would say, premium offer in the city center. So I don't see any risk of overproduction. Of course, it's not the same story in La Défense, where we are waiting around 300,000 square meter coming on the market. So this will have a big impact, of course, on vacancy rates, lowering rents, on incentives. So again, it's one or the other. It's either you are really in the center of the city, or you are in a suburb where you have this kind of overproduction where markets are volatile. Well, that's always have been the case. I mean, it's something that you have to cope with as an investor, because when you start a project, well, it's about 3 to 5 years. So I mean, you probably know in what market cycle you will be in once your building will be delivered. So I think at the end of the day, I mean, of course, Union Investment, for example, is a long-term investor, so we keep buildings for over 10 years, and we can come over bad and good cycles, of course, and in that case, I mean, that's not a big issue. But of course, I mean, in terms maybe of project also, and this was also said before, the product needs to change. I mean, I don't think that we can develop the same products as we have done here for decades. And also in La Défense, I mean, there's a lot of discussions about people not wanting to work in towers and high-rise buildings anymore. I think it's something which is really short-term, but I see that also with occupiers, coming to our sites, making inspections. They are speaking about healthy food. They are speaking about the quality of air. They want green environments. They want to have fresh air. Open the window. It's as simple as that. So the product will be changing substantially in the future, and that's something that it's difficult to foresee, because, as I said, when you start a project, I mean, it's at least 3, 5 or more years. So well, you have to forecast. You have to have a long-term vision in this business.
Yeah, it's interesting. I think those changes around office are going to be very interesting to watch. We've actually got a session this afternoon at 2:30 UK.
Yeah.
3:30 Paris time, looking at the future of office, and we'll be picking up some of the things that have been said in here as well. So let's just do a kind of final round of where you see, I guess, the opportunity now for people who are looking to enter the French market. Alfred, let's just start with you.
I think what would certainly be interesting, and I think it's going along with the development in office space, I think we will certainly have more flexibility, and therefore I think the micro-living would be certainly in city centers quite interesting, that people are working, let's say, in a city on the countryside, 300-400 kilometers from Paris away, and simply commuting between Paris and their home 3 days a week and being 2 days at home. So we would certainly need, from my perspective, a kind of small apartments where they can come in on a Tuesday evening, stay until Thursday, and get back home again. And that can also be used perhaps over the weekend for tourists getting into Paris, staying only over the weekend, preferring a small apartment and being in a hotel room. So I think that would be something, micro-living with a kind of, I'd say that small business, as I said, occupation over the weekend. That would be my guess, seeing it this way.
That sounds more like a business idea, Alfred. I like that. Good. Benjamin, what's kind of your view?
Well, I'm a lender, but as an investor today, I wouldn't look for the best prime properties, because to me their prices will continue and be very high. I would look at a property which offers some potential, but which is protected against the economy downturn over the coming years. So typically an asset which is well located, office facility, but which is a bit old, and which still has, say, 3-4 years of rent ahead, and that then needs to be fully refurbished and repositioned after the crisis is over. So that's something that I would do. And as an alternative investment, I would go for something which really reflects the current trends, like investing in landing pads for drones. We understand that the drone traffic will be massively increased as a great solution for transport of small packages, small assets small deliveries. Sorry, in large cities. So that might be an idea for the future.
Great. Well, I wasn't expecting that, Benjamin. So I like that. That's good. Nicola.
Well, because of the remote working that we've seen very successful over the last months, something that would allow employees not to work from their kitchen or living room, but some, let's say, local co-working office space in the residential suburbs, where you can still go out from your home, where you have maybe your babysitter with the kids, and go into some office space that looks like an office space, but it's not yet your headquarters, which may be still located in the CBD, and maybe going to the CBD located headquarters just to do some creative activity, socializing, and implement some ideas which we all need. But part of the time in this local co-working office space in the suburb area around Paris, and part of the time in the office space, which is the more traditional office space where you can go to meet your colleagues.
Okay, interesting. Thank you. Guillaume.
I'm pessimistic right now for the short term, but for the long term, it always bounces back. Well, that's what history has told us. So, it would be really standard. So, looking at retail, hotel, obviously you have to be careful when cherry picking, but it seems like a good idea because when you look at what a hotel like are experiencing, and notably in France, France is one of the top destinations, and today we're currently missing, obviously, all the Asian travelers, the American travelers, and all the people from the world. So when you look at the terrible situation of hotels and some also astute retails in the main destination, could it be in the top cities in France? It's really dramatic, but I would expect that eventually that virus story is going to be behind us, whether it's a cure, whether we're heard kind of protection or whatever. But I'm pretty sure that today digging into a well-located hotel, which are facing obviously a huge vacancy, mainly due to non-traveling possibilities, is a very proper choice. And so far there's not a lot of situations like this because obviously most of the owners or the retailers, retail owners have still a little bit of treasury to face that, and obviously they've been discussing with the bank, big support from the state behind, etc. But I would imagine that it won't last forever, and there will be some nice situation to come, and hopefully in the next 6, 9, 1 year and a half, borders are going to reopen, and we're going to welcome all nationalities to spend the money and to spend some time. So yeah, definitely cherry picking retail, hotel, and leisure sounds like a good plan to me.
Great, and I'm doing my bit. I've got a weekend in Paris, which I thought wasn't going to be happening, coming up. So I'm fingers crossed that is going to work. Tania, finally to you.
Well, we are going to continue to diversify as we have done in the past, and that's I think the best method, to materialize your risk. I would say that for France, we will be looking more for projects, development projects, or just buildings to be restructured in areas which are, changing, where there's a urban mutation going on, and very close to transport hubs, also in the frame of the Grand Paris, and but we would like to create our own products. So this is something we would like to focus on, and of course we continue also, investing in logistics, because for us it's always has been a resilient asset, and with the supply chain being more and more important, this is something that would like to continue investing on, and maybe also residential for the secured incomes. Also, there's a real lack of dwellings, and for demographic reasons, many different there are different fundamentals that we need to put more and more efforts, in providing housing. So this, I would say, would be the main lines of investment in the next year.
Thanks very much for joining us. Thank you to the panel for all of your insights, and thank you also for sharing your views. Look forward to joining you in an event shortly, but in the meantime, thanks very much. Stay safe, stay well, and I look forward to being in Paris shortly. Thank you.